Hello everyone, welcome to Nishma's Edu Launch. In the last class, we have seen the accounting concepts, basic concepts episode 1. If you have not watched that video, I'll be providing that link in the description box below. I suggest you to watch that and come back to today's session. In today's session, we will be discussing about the use of debit and credit. Now, in mathematics, we have 4 operations. What are they? Addition, subtraction, multiplication and division. And we have 4 operators each for each operations also. In accountancy, we have 2 operations, that is debit and credit. Now to understand debit and credit in more detail, you'll have to understand what is double entry system. We record books of account using double entry system. Double entry system states that for every transaction, at least 2 accounts will be involved and it will be recorded at 2 places. So in a transaction, if you debit a particular account, you'll have to credit another account with the same amount. In short, for every debit, there will be an equal and corresponding credit. Now let us understand that with an example. Let us take a transaction that is commenced business with cash. Say rupees 1 lakh. Okay. Now what is it? Commenced business with cash. So we have seen that I have already told you that it will for every transaction there will be 2 accounts. At least 2 accounts will be involved. Now can you say which 2 accounts are involved in this transaction? Yes, the first account is cash. Okay, so I'm just writing it under cash. Okay, now which is the another aspect or which is the another account that is involved? This business, commenced business. Now I'm going to modify that because you are going to commence business with what? You're going to commence business with capital. So I'm just going to modify it and I'm going to write it as capital. Okay, so which are the accounts involved? Cash and capital. Now let us apply the rules that we have studied in the last class. Cash. Cash is a real account. Now what is coming in? See, I already told you in the last class that we record or we keep books of account from the point of view of business. So here cash is coming into business. So what we will do as per the real account rule, we will debit. Debit what comes in, right? So we will debit it. Debit the cash account. Then capital. Capital, it is a liability for the business, right? That is the owner brings in business. Owner brings in cash or capital into business, which should be given back, reimbursed to the owner, right? So it is a liability for the business. All the liabilities will have credit balance. We'll see that later in this session. So capital is having credit balance. Being a liability, it will be credited. As the liability increase, we will be crediting it. Now the amount is rupees 1 lakh. 1 lakh cash, we brought in 1 lakh and together capital also we have 1 lakh. So what can we conclude from here? For every transaction, 2 accounts will be involved and it will be one account will be debited and another account will be credited with the same amount. So 2 places we record this transaction. This is about debit and credit. It is difficult to explain debit and credit or to explain debit and credit in a sentence or 2. You will gradually get an understanding as you practice more about this subject. Okay, so now I'm going to answer the next questions. At least some of you will be having. Whether debit means plus or minus and credit means minus or plus. Let it be something. So actually such a question is not relevant because the nature of the transaction and the accounts decide whether to increase increase the value of an entity or to decrease the value of an entity. Now let us see that in detail. Okay, so let us discuss these types of accounts in detail. Now we have four types of accounts here: assets, liabilities, expenses and incomes. And I have given their balances also. All assets will have debit balance, all liabilities will have credit balance, expenses will have debit balance, incomes will have credit balance. You'll have to study this by heart. Now I am going to explain this in detail. Suppose an asset, you have a plant and machinery. Okay, now you have a plant and machinery worth 1 lakh, say 1 lakh, and you're going to make an additional purchase of 50,000. Okay, so what will be the entry, or which accounts will be debited? You're going to purchase plant and machinery. So plant and machinery comes into business. So we will debit plant and machinery. Okay, debit plant and machinery. So we will debit plant and machinery account. Okay, so when you are increasing these type of accounts, you will give the same balance as here. Okay, same balance. You will if the balance is debit, when you increase the asset value of asset, you will debit it. And if you want to increase your liabilities, your debt, we'll give credit balance itself. We'll credit the accounts. Then expenses. For expenses we have debit balance. And when you want to increase your expenses, you will give debit itself. Okay. Same in the case of incomes. Incomes, or you have seen the nominal account rule, right? Incomes are credited. Credit all incomes and gains. So you will credit it. Okay. So you have increase. You can see that both the columns are same. Balance is same, and increase when the value of accounts increase, you give the same balance. Okay. That is, if you want to, assets I have already told you. When you buy plant and machinery comes in and you will debit the account. Plant and machinery account will be debited. Same as what I have written here. Now let us understand this liability. Liability, you have creditors. You will have to pay some amount to your creditors. You owe something to another person. They are known as your creditors. Okay, when your liability increase, that is, suppose you're borrowing some fund from your creditor. Okay, so what will be the entry, or what will be the accounts involved? Cash and your creditor. Person who is giving you money, lending you money, will be your creditor. So forget about the cash account. You just concentrate on the creditor's account. Okay, so just imagine cash account comes in. Cash comes in, so it will be debited. And creditors, credit the giver, person account rule. So you will credit the creditors. That's what I have written here. Credit balance. You will, when you increase your debt or your liability, you will credit it. Same as in the case of expense. Expense, what happens? Your salary. When imagine this accounts involved in salary paid, salary and cash. Salary being an expense, you will apply the nominal account rule and you will debit it. That's what I have written here. When your expense increase, you will debit it. Okay, I told you, don't consider the cash account now. Only consider the expense account. Okay, now incomes. Incomes, for example, your commission received. Okay, commission is an income. When you receive it, it is an income. So, what will be the accounts involved there? Cash and commission received. Cash will be debited as it is coming into business. It will be debited, and commission received being an income, it will be credited. Okay, so when your income increase, you will credit it. Okay, I hope this is clear. Increase and balance. Now we are going to consider what will happen if all these accounts, its value decrease. Okay, you'll have to give the opposite. That is, here it is debit. So in order to decrease it, you will give the other aspect of accounting, that is credit. You will credit the assets account. Then liabilities, when you are decreasing, it will be debited. Opposite of credit is debit. Okay. Now expense. Expense, to increase we debit. So opposite of that, to decrease it, we will credit it. Okay. Now next, incomes. Income to increase we will credit, and to decrease what will we do? The opposite of credit is debit. Okay, we will debit the incomes. Now let us consider each example in each of these cases. Now asset. I told you that asset to decrease we will credit the accounts. Suppose you have that plant and machinery worth 1 lakh in your hand. You're going to sell it off. What will be the journal entry? I mean, not journal entry. I have not taught you that. Consider the accounts involved. Cash, you're going to sell it for cash. So cash and plant and machinery, that will be the accounts involved. Cash you're receiving. When you sell off your machinery, you will receive cash. So cash account will be debited. And plant and machinery is going out. Real account. Again, real account rule applicable. You will credit what goes out. So plant and machinery account will be credited. That's what I have written here. Credit. Okay. I hope that is clear. Now let us consider liabilities. Suppose the creditor from whom you took some money, you're going to repay it. So what is going to happen there? Which are the two accounts involved? Creditors and cash account, right? So creditors, they are going to receive the money that you're going to give. They will receive it. Personal account rule, debit the receiver, debit. Your liability decreased, so you are going to debit the account. Okay. Now expenses. For increasing expense, I told you have to debit it. Now for decreasing it, the opposite of that, you should credit the expense. You have any of your expenses like salary or something. If its value is reducing, that means you had to pay 1000 rupees and now only you need to pay 500. So you will credit the account, salary account, with the same amount. Then income. Income, for increasing it, you will have to credit it. Now, if your income is decreasing. If your income is decreasing, you will have to debit that particular income's account with the amount of reduction. So, this is it. I think it would be better if you note down this table for your future reference. Okay. So, if you like this video, please like, share to the beneficiaries and subscribe for more videos. Thank you.